For 4 rounds, we have asked what China's largest open AI model can do. Today, we ask a completely different question: who paid for it, and whose hardware is it standing on? Because on July 31st, Bloomberg reported that the compute behind Kimi K3 is roughly 20,000 Nvidia chips, accessed through a computing agreement with Alibaba, the Hopper generation, H200 accelerators, according to people familiar with the arrangement. Alibaba is not only the landlord here. It is one of Moonshot's largest investors. 2 days before that report, Moonshot closed $3.5 billion at a $35 billion valuation, having set out to raise 1 to 2. And it is already asking investors for 50. This is the Money and Metal episode. No benchmarks, no vibes, a supply chain and a cap table. Start with what was actually reported. On July 31st, Bloomberg News said Moonshot AI has a computing power agreement with Alibaba Group covering the use of around 20,000 Nvidia chips, and that this hardware forms a substantial chunk of the total computing capacity behind the Kimi models. Bloomberg sources put those 20,000 chips in Nvidia's Hopper generation, specifically the H200 accelerator. That is one report, citing people familiar with the company's operations, and we want to be precise about that. It is not a filing, and it is not a company disclosure. But it is the first concrete public number anyone has attached to the compute behind a model that has dominated the AI conversation for 2 straight weeks. Now the part that turns a hardware story into a business story. Alibaba is not a neutral vendor here. According to Bloomberg, Alibaba is one of Moonshot's largest investors, and it expects the companies it backs to use its cloud. Public records of the company's history describe Alibaba leading a $1 billion round in February 2024, reportedly taking a 36% stake for about $800 million, a stake that several later rounds would have diluted. So follow the loop. Investor money goes into Moonshot as equity. Moonshot spends a large part of it renting compute. The compute is rented from the investor. The investor books it as cloud revenue. And there is a detail inside Bloomberg's report that is easy to skim past and worth slowing down for. An Alibaba spokesperson denied providing H200-powered compute to Moonshot, but, per the report, did not deny the broader agreement supplying 20,000 Nvidia chips and declined to comment on which models were involved. That is a very specific shape of denial. It pushes back on the chip generation, not on the arrangement. And there is a second irony sitting on top of it. The reporting notes that Kimi, running on infrastructure provided by Alibaba, has now surpassed Alibaba's own Qwen models on important performance metrics. The landlord's tenant is beating the landlord. So why does the word Hopper matter so much? Because Hopper is the generation Washington decided it could live with, and Blackwell is the one it did not. And the accusation on the table concerns Blackwell. On July 22nd and 23rd, Michael Kratsios, director of the White House Office of Science and Technology Policy, publicly claimed Moonshot had accessed restricted Blackwell accelerators, naming GB300 servers in Thailand, and used them in the development of K3. Bloomberg's July 31st report adds a piece of that puzzle. A person familiar with Moonshot's procurement confirmed the startup does have a channel for accessing Blackwell processors via Southeast Asia, while not specifying whether that channel is a legal rental arrangement or a direct purchase. We cannot independently verify that channel, and we are not going to pretend otherwise. Moonshot has not publicly confirmed or denied the specifics, and has separately denied using American models to train K3. What is not in dispute is the direction of travel. Bloomberg reported on July 28 that Moonshot is seeking more of Nvidia's Blackwell chips to train its next model, Kimi K4, described as meaningfully larger than K3's 2.8 trillion parameters. Read that plainly. The company whose flagship is held up as proof that China no longer needs American silicon is, by that reporting, shopping for the most restricted American silicon on the market. To be fair to Moonshot, its own public position has been the opposite of a boast about hardware. Back in November 2025, The South China Morning Post reported the company claiming it builds models using fewer high-end AI chips than its U.S. rivals. Efficiency is strategy, not scale. And the domestic alternative is genuinely growing. Shipments of Huawei's Ascend accelerators rose from around 507,000 units in 2024 to roughly 805,000 in 2025. Both things are true at once. Chinese silicon is scaling fast, and the single most celebrated Chinese model of this year still, by the reporting, leaned on Nvidia. Here is where the story gets genuinely strange, and it takes two governments to explain. Start with Washington. Following a December 8, 2025 announcement, the Bureau of Industry and Security published a revised license review policy on January 13, 2026, allowing case-by-case export licenses for the Nvidia H200, the AMD MI325X, and similar chips to China. The conditions, straight from the Commerce Department release. The export must not reduce global semiconductor capacity available to U.S. customers. The Chinese purchaser must have adopted export compliance procedures, including customer screening, and the product must have passed independent third-party testing in the United States. Analysts at the Institute for AI Policy and Strategy put numbers on what that policy actually permits. Exports to China are capped in aggregate rather than per company. They cannot exceed 50% of that chip's sales for end use in the United States, which their analysis estimates allows on the order of 900,000 H200 equivalents to start, growing as U.S. sales grow. The arrangement also carries a reported 25% export fee, which the same analysis values at roughly $6.75 billion a year. And Blackwell, the generation Moonshot reportedly wants for K4, is not on the approved list at all. Now turn the map around, because Beijing's answer was almost immediate. Reporting describes China's Ministry of Industry and Information Technology telling domestic AI companies on January 14th, one day after the American policy landed, to prioritize homegrown silicon over the newly approved H200, with customs officials instructed that H200s were not permitted to enter. The Cyberspace Administration separately told large firms, including Alibaba and ByteDance, to stop buying and cancel orders for another Nvidia part. And in May, Semaphore reported China banning the import of some Nvidia chips outright. So the trophy model of Chinese AI self-reliance sits, by the reporting, inside a compute arrangement that Washington restricts and Beijing discourages. Now the round, because the timing is almost comic. On July 29th, 2 days before the chip report, Moonshot closed a $3.5 billion financing that values the Beijing lab at $35 billion. The round had opened earlier in the summer at a $31.5 billion pre-money valuation, and the company had originally set out to raise $1 to $2 billion. It raised roughly double the top of its own target. Whatever else K3 did or did not do to the benchmark tables, it did something extremely legible to a term sheet. Against that, the operating numbers. Reporting on the fundraising describes annual recurring revenue of about $200 million in April, crossing $300 million by June, with API sales accounting for more than 70% of total revenue and serving as the main growth driver. Daily sales are described as rising six-fold after the K3 release. And there is a physical fact that connects this chapter to the last one. On July 19th, Moonshot suspended new subscriptions because of K3 demand, a post that drew 284 points on Hacker News. Demand outran the cluster. That is what shopping for more chips looks like from the outside. So let us do the arithmetic ourselves, carefully, and with zero investment advice. $35 billion of valuation against roughly $300 million of annual recurring revenue is about 117 times revenue. The follow-on round the company is reportedly discussing, a $50 billion pre-money valuation, its final private raise before a Hong Kong listing, would be around 167 times. For coordinates, on widely reported figures, Anthropic's most recent valuation of roughly $965 billion against a $47 billion run rate is on the order of 20 times, and OpenAI's roughly $852 billion against about $25 billion is on the order of 34 times. Those are other people's reported numbers. The division is ours. And where does the money physically go? A large share of it goes back out the door to buy compute, which brings us back to the landlord. Alibaba's most recent full-year results show Cloud Intelligence Group revenue up 38% year-on-year to about 41.6 billion yuan in the quarter, with AI-related product revenue hitting roughly 9 billion yuan, an annualized run rate the company puts near 36 billion yuan, or about $5.3 billion. Adjusted profitability took the hit you would expect from that build-out. And Chief Executive Eddie Wu has signaled the group is likely to overshoot its original 380 billion yuan capital expenditure target. Moonshot's rent is a line item in that story. A $50 billion private ask ahead of a Hong Kong listing raises an obvious question. What happens to Chinese AI pure plays once they are actually priced by a public market every day? We have 2 live experiments, and unlike almost everything else in this story, we can check them ourselves. Zhipu, trading as Z.AI, stock code 2513 in Hong Kong. Listed on January 8th at an offer price of 116.2 Hong Kong dollars. Minimax, stock code 0100, followed on January 9th. Both are foundation model companies. Both went public before Moonshot. We pulled both charts ourselves, and they are a ride. Z.AI closed its first session at 131.5 Hong Kong dollars, ran to a high of 2,410 on June 22nd, and closed July 30th at 862. Still many times the listing price, and down roughly 64% from the June peak. Minimax closed its first session at 345, peaked at 1,238 on March 18th, and closed July 30th at 203.8, below where it started trading, and down roughly 84% from the high. Put market values on that, and the coordinate gets sharper. At those levels, Z.AI carries a market capitalization of roughly 440 billion Hong Kong dollars, around 56 billion US at the current rate of about 7.84, while Minimax sits near 80.5 billion Hong Kong dollars, or roughly 10.3 billion US. So the $50 billion Moonshot is reportedly seeking in private would put it, before it ever rings a bell, in the same neighborhood as the most valuable listed Chinese model company. We are describing prices, not predicting them, and this is not investment advice. Here is what this angle actually reveals about the open weights business model, and it is not what either side of the argument usually says. Moonshot gives the weights away and takes more than 70% of its revenue from the API. The free file is not the product, it is distribution. It creates a worldwide population of engineers who know the model, standardizes tooling around it, and makes the hosted endpoint the path of least resistance for everyone who cannot physically run 1.5 terabytes. The weights are the marketing budget. The API is the business. And the equity round is the scoreboard both are actually playing for. The second thing it reveals is what the export control debate is actually measuring. For 2 weeks, the loudest framing has been that K3 proves the controls failed and that China no longer needs American chips. The reporting we have walked through complicates both halves of that sentence. The model is real, the capability is real, and the compute behind it is, by Bloomberg's account, 20,000 Nvidia parts rented from a company that is simultaneously its shareholder, with the next model reportedly waiting on chips that are still banned. That is not a story about controls failing. It is a story about controls shaping who pays whom and through which country. And it raises the stake that nobody is priced. The accusations are not just rhetorical. On July 22nd, U.S. Treasury Secretary Scott Bessent said that when Chinese firms conduct covert, industrial-scale distillation attacks that cross the line into IP theft, sanctions, and entity list designations will be on the table. Beijing has publicly rejected the underlying claims. Moonshot has denied training K3 on American models and has not addressed the chip allegations in detail. If an entity list designation ever lands on a company that is about to list in Hong Kong, the thing being repriced is not a benchmark score. It is a cap table. For things to watch, and each one is checkable. First, K4 and its hardware. If Moonshot ships a meaningfully larger model, the interesting question is no longer the parameter count. It is which generation of accelerator trained it, and whether anyone can prove it from the technical report. Second, the $50 billion round. Opening those conversations now means asking new investors to accept a valuation set weeks earlier by a round that was already oversubscribed. Whether it clears, and at what number, is the cleanest read available on how the private market prices a Chinese frontier lab. Third, the two regulatory decisions that could land without warning. On the American side, whether the Treasury threat becomes an actual designation. On the Chinese side, whether Beijing follows through on the plan reported in July to restrict overseas access to its top models. The consultations reportedly involve Alibaba, ByteDance, and Zhipu, and the proposal on the table would keep API and cloud access open while restricting foreign downloads of the weights themselves. Fourth, Alibaba's next set of numbers. Capital expenditure and cloud growth are where this entire arrangement shows up in public accounting. And that is the one document in this story that gets audited. So that is your AI Daily Deep Dive. Round 1 was the hype. Round 2 was the audit. Round 3 was the receipt. Round 4 was the correction. And round 5 is the invoice. Strip away the benchmark arguments, and what is left is a startup worth $35 billion, renting 20,000 American chips from its own largest shareholder, shopping for a generation of hardware two governments have tried to keep out of its hands, and preparing to list in Hong Kong on the strength of a model it gives away for free. Every number in this episode is checkable. None of it is investment advice, and the next chapter is being written in a procurement office rather than a research lab. If this is the kind of coverage you want, the money in the metal, not the noise, subscribe, and we will keep pulling the receipts.